Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 11th of October. We have a busy week ahead of us, which starts with slow economic calendar on Monday. On Tuesday, we should be on the lookout for UK unemployment figures for August and also Eurozone ZEW economic sentiment survey. Going forward, Chinese trade balance figures, including imports and exports. Also, UK GDP August figures, US consumer price index for September, US crude oil inventories, and FOMC minutes will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for Australian unemployment data, also Chinese consumer price index, and US jobless claims data in the afternoon. The week will finish on Friday with China and US retail sales for September. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin had a bullish breakout after this sideways consolidation, in particular an end of day close above psychologically important 45,000 level. The current price action from the intraday point of view, this is a 4-hourly time frame, is uptrending, creating higher lows. The price is supported by multiple moving averages, and we can also draw a trend line. Key trading level going forward is at 50,700. Call it 50,000. It's a nice and round number. As long as that level holds, bulls are in charge. So overbought, pullbacks, some profit taking to retest 50,000 and a rally, or a breakout above 56,000 on the upside could open the way for the continuation to the upside, targeting additional resistances at 58,700, 60,000, possibly even 60,800 to the upside. Alternatively, if you see a corrective pullback and a loss, an end of day close of 50,000 level, retest of that level from underneath as a newly found resistance, that could open the way for a deeper corrective pullback, targeting additional supports initially at 48, possibly 45,700. This is DAX, or German 40. The price action is downtrending in this intraday time frame, although the daily time frame is bouncing off psychologically important 200 period moving average. So the key level to downside is at 14,930. Sideways consolidation here and a push higher, a break above 15,300, 15,320, a retest of that level from above as a newly found support could open the way for the extension to the upside. Therefore, retest of this falling resistance trend line towards 15,600, breakout above that level targets 15,670 and higher. Alternatively, if we see a rally and a rejection, or we see a corrective pullback and a loss of 15,100 area, retest of that level from underneath as a newly found resistance could open the way for another retest of psychologically important 200-day moving average close to 14,900. This is NASDAQ. NASDAQ is downtrending in intraday time frame. The price is the price chart looks very similar to what we saw in DAX, but we have the sequence of lower highs, and then we have a falling resistance trend line, and we have this sideways consolidation. NASDAQ didn't really react in any meaningful way to US unemployment data that we got on Friday. Key trading level going forward is at 14,900. A rally and a push through that level, in particular break above 15,000, which is a cluster of these previous lows from 21st of September, could open the way for the extension to the upside and retest of this falling resistance trend line, 15,150. Break above that, 15,300 comes in play. So either a rally and a rejection, or a gradual move lower, and the loss of these current lows at 14,700 would negate that, potentially opening the way for another retest of the cluster of these two lows from the 4th of October at 14,460, 14,400 to the downside. Let's talk about euro dollar. Euro dollar is downtrending at the moment. We have a significant US dollar strength lately, sequence of lower highs, multiple trend lines capping the price. This appears to be a sideways consolidation in the same way as we saw it here and then also here. They all result in quite possible push to the downside, therefore further selling pressure. If we see an oversold rally into resistance, keep an eye on one spot 1630 for a rejection, break above that level, one spot 1650 for a rejection to the downside only, an end of day close above one spot 1650 and a retest of that level from above could open the way for the retest of additional resistance at one spot 17. Alternatively, if we see a rally and a rejection, or a gradual move lower and the loss of these current lows at one spot 1550, one spot 1530 to the downside, that would trigger further selling pressure, further bearish extension to the downside, targeting support at one spot 15. Cable sterling dollar also looks bearish. High, lower high, lower high. The current price is currently forming a price pattern which is known as a rising wedge. They have the tendency to break to the downside in clearly defined downtrending markets. We know US dollar strength is quite visible. Next week, i.e. the week ahead, we have FOMC minutes on Wednesday. There is a few other economic data releases which could trigger US dollar volatility, and obviously keep an eye on Fed. So dip lower below key trading level and one spot 35.70, an end of day close below that level and a retest of that level from underneath could then possibly indicate the extension to the downside, potentially targeting additional support at one spot 35, one spot 34.10, possibly even lower. Alternatively, if we see a rally and a push higher, an end of day close, a breakout above one spot 36.80, a retest of that level from above as a newly found support could create a short squeeze targeting additional resistances at one spot 37.30, one spot 38, possibly one spot 38.90. Dollar yen, yet again, US dollar bullishness here is clearly visible. We had a massive breakout higher, sideways consolidation in something that looks like a triangle or a pennant, if you want to call it that way. These type of patterns, they have the tendency to break to the upside, breakout, and then a retest. Looks like a textbook breakout. Key trading level going forward is at 111.50. Bulls are in charge above that level. So if you see a corrective pullback to 111.80, 111.50 and a rally, or if we see a continuation to the upside, that could potentially open the way for the extension to the upside, targeting additional resistance towards 112.70, 113 and even higher. Alternatively, we see a corrective pullback loss of 111.50 that could open the way for the retest of additional supports to the downside at 111.20, 111. Gold, a confused reaction here to non-farm payrolls. This looks like a breakout above this falling resistance trend line and then sideways consolidation. This last 3 or 4 candles here are actually Friday's trading range, and you can see that we saw a massive breakout higher here through psychologically important 1770 level, but the price wasn't able to sustain itself and create an end of day close above that level. Instead, we saw this big reversal and the selling pressure, and the price closed below, close to where it started actually, 1757, 1759. So key trading level going forward is at 1770. Bulls definitely require a push higher and an end of day close above 1770 for a potential extension to the upside, targeting 1780, 1790, possibly even 1800, 1802 to the upside. Alternatively, if we see a gradual move lower and the loss of 1750 support, a retest of that level from underneath as a newly found resistance, that could open the way for a deeper corrective pullback, targeting additional support at 1740, 1735. Lastly, let's talk about crude oil. Crude oil had a bullish run. We had corrective pullbacks. Last week we had a corrective pullback towards this rising support trend line. 75 level held. We had a massive reversal here and a push higher. Key trading level going forward is at 78. As long as that level holds, bulls are in charge. Pullback to 78 and a rally, or a rally from the current levels and a breakout above psychologically important $80 per barrel. Hugely important round number. An end of day close above 80 could open the way for a gradual move higher, targeting additional resistances at 81, 82, possibly even 83. Alternatively, if you see a pullback lower and a loss of 78 level, retest of that level from underneath as a newly found resistance, that could open the way for a gradual move lower, targeting additional supports initially at 77.14, possibly even 76.50 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.